Gold, the first gold ETF started 20 years ago. And so over the past 20 years, if you look at all the gold that all these ETFs own, it's about 1.6% of the above ground supply of gold. That's it. 1.6% in 20 years. That's all they've been able to buy. If you look at how much they own relative to the trading every day of gold, it's about 1 day's volume. So basically, if all of the gold ETFs in the world liquidated all their gold on the same day, the market would absorb it. I mean, gold might be down a bit, maybe it'd be down $100, I don't know, but the market would absorb the selling, all of it, no problem. Look at what's happened just this year with these Bitcoin ETFs. I think the Bitcoin ETFs, along with MicroStrategy and Mara, right, they own at least 8% of the Bitcoin already. So if there's ever a big liquidation out of the Bitcoin ETFs, look out below. There is no depth to this market. Right now, they're all hoping that it's the government that's going to bail everybody out.
In today's news recap, gold price holding its ground near $2,700 as U.S. annual CPI rises 2.7% in line with expectations. Gold prices are holding within striking distance of $2,700 an ounce as stubborn inflation fails to drive investors out of the marketplace. The consumer price index rose 0.3% last month after October's 0.2% rise, the U.S. Bureau of Labor Statistics announced on Wednesday. The inflation data was in line with expectations. The report stated that in the 12 months leading to October, headline inflation rose 2.7%, also in line with expectations and up from September's 2.6% print. Core CPI, which excludes volatile food and energy prices, increased 0.3% in November, matching expectations and mirroring September's 0.3% reading. The report also noted that annual core inflation rose by 3.3% last month, unchanged from October's reading and consistent with expectations. Although inflation has moved higher, there were no major surprises to unsettle investors. The gold market is seeing some modest buying, but remains close to neutral territory. Spot gold last traded at $2,698 an ounce, up 0.15% on the day. While inflation remains a concern, economists note that the data contained no major surprises that would deter the Federal Reserve from cutting interest rates next week. However, uncertainty surrounding the easing cycle in 2025 continues to grow. Risks around the monetary policy outlook are set to become increasingly two-sided in the first quarter of next year. Chiefly, policymakers will be concerned about the potential upside inflation risks stemming from incoming President Trump's tariff plans, as well as the broader reflationary fiscal stance, whereby strong demand could further fuel price pressures, said Michael Brown, senior market researcher at Pepperstone. On the whole, the pace of policy normalization is likely to be much slower in 2025, with the FOMC plotting a more deliberate course as rates move closer to a neutral level, likely around 3%. Now, we'll show you the best clips of the latest interview, but first, hit the like button, smash the subscribe button, and check the pinned comment because we're offering an exclusive discount on NordVPN, an essential tool for gold and silver stackers who value privacy and security. Make sure you safeguard your online activity and protect yourself from prying eyes. And if you want to learn how to stack and how you can benefit from the gold-silver ratio to make savvy investment decisions, check our guide at goldsilverstacks.com. Enjoy the episode.
Gold, which has risen by better than $60 an ounce so far this week. I'm recording the podcast live on Tuesday evening, just after 8 p.m. New York time. Gold is trading just above $2,700 an ounce. So that means we're less than $100 below the all-time record high. So we've recovered most of what was lost following the election of Trump. In fact, gold was about 2750, so it was already off its highs when Trump won the election. So gold's now only down, less than $50 from where it was. And in fact, I'm looking at gold trading on Wednesday morning in Australia, and gold is at an all-time record high tonight in Australian dollars. And recently it made all-time record highs in the euro and the British pound as well. So it's just the US dollar that we haven't made a record high in, but we will shortly. So you're talking about maybe gold being down 3.5% from its record high. Yet if you look at the gold stocks, look at the GDX, based on where it closed today, and it's been up the last couple of days because gold's, really moved. But the GDX, which is the big index of gold mining stocks, would have to rise 16.4% to get back to the high from before Trump was elected. 16.4%. Gold only has to rally about 4% to make a new record high. That just shows you how overdone the sell-off in gold mining stocks is, how negative the sentiment is. In fact, if you look at where the GDX is trading now, it's trading about where it was in July, when gold is well over $300 an ounce higher now than it was in July. So none of the increase in the price of gold has benefited the companies that mine it. And of course, they own a lot of gold in the ground. That's what they're mining. They're mining their own gold. In fact, if you remember when Newmont Mining had a big drop, it was because of higher than expected costs. And most of that was from an Australian mine. They bought out and Newcrest Mining in Australia, or here. Maybe they bought them both, but there was some a higher costs. Well, costs are collapsing in Australia right now because the biggest cost for the mining company is the workers, the labor. Well, when the Australian dollar is falling as the price of gold is rising, that's the best of all situations for gold mining companies. See, normally when the price of gold is going up, the dollar is going down. And so that would mean the Australian dollar is going up or the Canadian dollar is going up. And so that would increase their local costs. But when you have a situation where gold is rising and the dollar is also rising, if that can happen, which is rare, but it's been happening, that's actually better for gold mining companies than when the dollar is falling, because it means their profits are going to go up even more. So what's happened recently, and if you throw in cheap oil, and oil prices under $70 a barrel in dollar terms are very cheap. So oil in relation to gold is as cheap as it's ever been. This is great for the profits. So I know there has been some stumbling blocks. Companies have missed numbers, but I know that we are getting ready for some major upside surprises in earnings and dividends in these gold mining stocks, and nobody is positioned for that. So I really think people should be buying gold here at about 2,700. It's still a good price. Silver right about $32 an ounce. It held the $30 support level. As I've been saying on the podcast, I think $30 silver is like $2,000 gold was. That was the support that we rallied off of and went all the way up to almost 2,800 before we had a pullback on, Trump was the catalyst to get that and the dollar rally. We got a pullback in silver as well, but it held that $30 support level, and $32 is a cheap price. So people should be buying the metals, going to
In the continuation of the show, Peter Schiff dives into his critical perspective on Bitcoin, explaining why he believes gold remains vastly superior as a store of value and hedge against economic uncertainty. Schiff highlights the speculative nature of Bitcoin's rise, fueled by sentiment and opportunistic trading, rather than the intrinsic value and historical legacy that underpin gold's reliability. He dismisses Bitcoin as digital gold, arguing that its extreme volatility and dependence on speculative capital make it a bubble waiting to burst. Schiff will also address recent calls for Bitcoin to become part of the U.S. Strategic National Reserve, a notion he vehemently opposes. He explains why replacing a proven asset like gold with an untested speculative digital token would be disastrous for the nation's financial stability. Schiff further critiques what he sees as the Trump family's active role in promoting Bitcoin, describing it as a family business aimed at inflating its price for personal and political gain rather than an asset with real economic utility. As Schiff unpacks these issues, he contrasts Bitcoin's speculative frenzy with gold's centuries-long role as a safe haven through economic crises. He argues that while Bitcoin's narrative continues to shift from a currency to digital gold, gold's intrinsic value, universal acceptance, and role in wealth preservation remain unparalleled. Now, we'll show you more clips, but first hit that like button and make sure you check our pinned comment to get a massive discount on both our gold and silver stacking guide and in the most sought after VPN in the market with NordVPN. Let's get back into the episode.
Of course, again, nobody is paying attention to gold. Nobody's paying attention to silver. Even fewer people are paying attention to the mining stocks because they're just paying attention to Bitcoin. They had that 100,000 party. Bitcoin got above 100,000. It didn't stay there for long. I mean, it's back below it. In fact, I think it's around 96,000 now, but I mean, it's still pretty close. But, the main reason it's still so high is because of Michael Saylor, who just announced this morning another 2.1 billion spent buying Bitcoin. That's 13.6 billion he's spent since November 1st. And now he's got this other company, Mara, that just announced, I think today or yesterday, it just spent another $1.1 billion buying Bitcoin. You've got these companies that are levering up their balance sheet, issuing debt to buy Bitcoin. And again, the institutions that are lending them the money don't want to buy Bitcoin. They don't want to take the risk. They think they've got a freebie. They think they've got a free ride on Bitcoin by buying these convertible notes. They're hoping to cash in a big profit when either Mara or MicroStrategy shares go up, and they want to, sell with a big gain. But they expect that if the stocks go down because Bitcoin goes down, well, they just get their money back, right? Because they're creditors. They're guaranteed their money back. Well, they're not guaranteed anything if MicroStrategy can't pay or Mara can't pay, which they won't be able to do if the price of Bitcoin goes way down, which ultimately it is going to do, especially when all the buyers really, it's our MicroStrategy and Mara and a lot of these ETFs, which are all speculators. This is all spec money. Nobody is buying these companies to use Bitcoin as money, to use it as a medium of exchange. I mean, that was the entire purpose for which it was created. Go read the Satoshi white paper. They had to reinvent it as digital gold because it failed at its primary objective because it can't do it. But it's not digital gold either because it's got nothing in common with gold. Yet despite that, you hear all these asinine statements being made. Michael Saylor now is advocating. I'm not making this up. I just heard the interview. He's saying that he wants the U.S. government to sell all of its gold, 100% of it, and buy 25% of the Bitcoin in the world, like all just bought up by the U.S. government. And he claims that if the U.S. government does this, it'll make gold worthless, will demonetize gold, and bankrupt all of our enemies who own gold. Well, first of all, if we're going to make gold worthless by selling it, how are we going to use it to buy 25% of the world's Bitcoin, right? So it doesn't even make any sense. But what good would it be to own 25% of the world's Bitcoin? I mean, it means nothing. He thinks, the U.S. is going to own the world. We're going to rule the world with 25% of nothing. We're going to be the laughing stock of the world if we did that. And meanwhile, our trading partners would scoop up that gold. It wouldn't be worthless. It'd be even more valuable when the U.S. government no longer owned it. I mean, it's the most asinine idea to suggest that. But again, Michael Saylor doesn't give a damn about the country. He just wants to prop up the price of Bitcoin. He's just talking up Bitcoin. He doesn't care how much damage he has to do to the U.S. economy. That's why a recent post I put on X, I said that Bitcoin is now a national security threat. It's public enemy number one. I mean, it's one thing if people want to be dumb enough and put their own money in Bitcoin. I mean, I don't care. People can lose money if they want. I mean, it's not good for society because we could use those resources productively. But, if in a free country, people can waste their money. I mean, there's nothing I can do about it. People have a right to do dumb things. That's what freedom is all about. Now, we'd be better off if people did smart things with their money, but sometimes they do dumb things and they'll learn a lesson. But it's a completely different ballgame when you're talking about government using the public money, where politicians have been bribed to go out and buy Bitcoin. Just to do what?
What do you think about Peter Schiff's perspective? Do you agree that gold remains the ultimate safe haven, or do you see Bitcoin as a legitimate contender for the future of money and wealth preservation? Schiff's views certainly challenge the mainstream crypto narrative. So where do you stand? Let us know your thoughts in the comments below. Don't forget to like and subscribe for more in-depth discussions on gold, silver, and the broader financial landscape. Now check this video right here because you'll love it, and I'll see you on the other side.